What's up? I had a request for a Nordic American Tankers follow-up. This is NAT. I've got it on the daily candles, and we're gonna look at the history, the balance sheets, check out their, their debt ratios and their what kind of fleet they have and what they're doing. So this is Brian Lewis with MMT Investing, and things just changed, and we have, I think this is a peak at 56 around 2005. That's an early peak. A lot of them were peaking around, 2008 or something. 40. Okay, so like 40s and 50s is high prices for these ones. And then their balance sheet's great. They're cash positive. They stay cash positive. And their assets and liabilities are equal to the penny, which sounds like a little financial engineering, um, but that's fine, whatever. And they came down here and sat around $2, which is interesting. And they had a little bump here around December. We saw some of that. But look at this recent price action. I mean, they were at 17. Well, not that recent. I mean, it's 2015, but yeah, I mean, it seems like they have a lot of room here. And if I counted correctly, they have 23 ships. Let's get in here a little tighter. They had 23 Suezmax ships, which are the medium-sized ones, and they're all available for crude storage. And they have the double hull tankers for cold water, and so they can go anywhere. And their CEO's ridiculous. He came out on TV the other day, just like freaking out, like, "Oh my God, this is the best period in oil tanker history. We're making so much money, we don't even know what to do with it," and like making a huge like buzz. So that's funny. And let's see what actually is going on here with the stock chart right now. And their flags, their fleet is flying mostly Caribbean flags. It was Bahamas and which ones were it? I can't remember. It was Marshall Islands and Bahamas, and they had a couple Liberia. There was three different Caribbean island flags in there, but it's mostly Caribbean island flags. It's Nordic American tankers, so they're not actually coming out of the Nordic region there, but they do have cold water double hull boats. And yeah, and this is what we're seeing with a lot of the tanker stocks, which is just a crazy frenzy of volume here, and we're getting some either island top peaks or some sort of parabola reversals, or let me switch over to a tighter candle view so we can get in here on this chart. Okay, I've got it down to 1 hour candles here, and so they have been down near this kind of $2 historic bottom range coming into the crash. And let's just do a little drawing of the stock market versus Nordic. That's March, not there. Here we go. February 20 here. Okay, so we got a dead cat, we got a crash, we got a sweep and a bull trap on the S&P, and Nordic Tankers has been roughly a good long, and the action is interesting. This is kind of the bull trap reaction here. So the dead cat bounce reaction. It got a tiny, tiny dead cat bounce reaction, and then said absolutely no way to crashing with the crash. The beginning of the bull trap, small, and then it got this hyperbolic just slingshot on the second half of the bull trap, which we've already reversed out of. And so it looks like, yeah, not exactly an island top reversal, but just like a parabolic reversal here. So let's look at the stock market, and let's do some things. So wait, did I mention the balance sheet? I think so. Their balance sheet is positive. It looks just fine. And yeah, and so they're getting later action in this cycle, which I like a lot. So the companies that have been up the whole time, I think, have less room to kind of slingshot up. And this is one with a good balance sheet that got a big slingshot. And this may have had something to do with that crazy couple of interviews that he did. Just like he went out like a salesman, just like, whoa, it's so crazy. It's the most money anyone's ever seen. And they're asking how much money it would cost to rent a tanker. And he's like, you couldn't afford it. They're just so expensive right now. It's so funny. All right. So I see that we're on on an Elliott 5 wave kind of on the S&P, and I think we're going to get a correction wave down on the S&P. I think the tankers are going to come right down with it, but probably not that far. I mean, it's probably from here is more reasonable to the where it was going, and this I think this top was kind of a fake buzz top, and I think we'll come down just a little. I mean, it's really not coming down much on these downs, and I'll just kind of go along this line and say like we'll probably get a down for a couple weeks here, and then we'll probably get a good up. I'm looking for a dead cat bounce on the S&P, and that would be a good up here, and then another down and a bull trap on the S&P, and then sort of an end of cycle point out in, I don't know, a month and a half or 2 months where we get a positive credit expansion cycle where the whole cycle switches, because this is a credit contraction down cycle. And at the end, it looks like we're going to switch into a credit expansion up cycle. I'll have to track the data on that because I mean, we'll have to see if are we actually going to get growth at the end of this, but I think so. So that is the dead cat kind of up, and then probably another down, which shouldn't be too far. And then I think the next bull chat will be a big double up, and this is a really good spot to get into these tankers. And this one, see, I don't know if this top is realistic or if this is just like a little buzz top. It looks like it's buzz and not really the price action. I think the price action on this one is a little bit, well, let's look at the percentages. I mean, it's massive. It's going from two, even without the parabola, it's going from 250 to 7. I mean, that's huge. That's just insane. So this is a great one for speculative ups, and I don't think it's good, or this is not investment advice, but for me, I'm not trying to hold any of the tankers on this next leg down. I only want the tankers on the up moves, and then out here on the next leg, I talked about the oil futures and the contango situation and everything. So right now, all the oil tanker companies, they're not physically 99% full, but as far as the availability to buy oil tanker space, only like 1% of them are available to negotiate on renting space on these tankers. And the prices are just going up like 10x right now. People are paying crazy prices for the last available space on these tankers. And the oil contango means that we are at a spot price. Where are we here? The oil spot price is lower than the future price. And so what happens with oil is if you have a spot price lower than the futures price, you want to hang on to those contracts until you get a better ratio. But the problem with the oil contracts is that they're going to expire, and the oil contracts require, if you hold on to them until expiration, executing an oil contract means that you are accepting physical delivery of oil, barrels of oil. So the speculators that are holding these contracts are getting a massive long squeeze because they're holding on to physical delivery contracts that are upside down relative to the futures, and they have to sell them at minus. I mean, we saw like minus $40 a barrel is the price that people are getting rid of the contracts at because they can't take physical delivery. But the oil contango situation is going to reverse soon in a couple of months, and the futures go up. And then I just saw Jeffrey Snyder posting about the oil futures, and they're headed down towards the end of the year, which, I mean, that's going to reverse the contango situation over the next couple of months, and probably is not going to be super hypey great for the tankers over the period where the contango switches. And then the oil prices coming back down will probably be good for the tankers here. So I guess in summary, I really like the please hit the like button to help me out with the YouTube algorithm. I really like the tankers on the ups. Just in this credit contraction cycle, I think we have another month and a half, 2 months of the down cycle movement. And I really like the tankers just on the up moves. Careful swing trades. This is a really, really dangerous credit contraction cycle. And you have to be very, very careful on the timing and trades, and then call options are really dangerous if you're in a contraction cycle in a bear market. Getting stuck holding call options is scary, but I don't think it's too scary to do call options on these tankers because they look like net long on the whole cycle. So this is one of the very, very few things that I would consider a call option on in this credit contraction cycle. Maybe gold. I mean, that's kind of weird to do a call on gold, but I think I will be doing some call options, and they'll be tankers. And this is a really good one. Good balance sheet, crazy CEO, and um, and then the following 3 months or so after this cycle, probably there's going to be a ton of good stocks that are low value that can bounce really hard out of the crash. And I mean, you could just see like a bounce out of here with a bunch of stocks, a bunch of tech stocks, things like that. And then after that, we get lower oil prices again. I think the tankers are going to be, for the next 2 or 3 years, a really, really good, solid stock during a longer bear market that is a net long stock over the bear market, which is going to be really hard to find. So that's the overview. Careful timing on the switches, on the cycles inside. Like these intermediate cycles here are going to be really important. And then the intermediate cycles on the up are going to be less important because it's just a boring expansion. And I don't know how high it'll be, but it's going to be a long scenario here for a lot of stocks, whereas there's almost nothing to go long on this whole credit contraction cycle. And like gold and tankers seem to be net long, but still isn't good to be holding them when they're doing this, and they're going to be doing that intermediately throughout the rest of this cycle. Okay, so that's the Nordic American tanker follow up. I think that was it. I'm trying to think if I looked up any other things that I forgot to mention. I don't think so. All right, so that's Nordic American Tankers, the cold water tankers. It's a smaller fleet, mid-sized fleet. It's not a huge company, and you can see the price. I mean, the prices are low relative to. I mean, I think these prices are low. I think they have a lot of up room to go, and they've had historically high prices. And this is a really good one with a good balance sheet. I do like this one a lot, and I like it. I like it a lot out here too. So I think this is a really good one. And happy trading.